Wabihi nasta'in wassalatu wassalamu ala rasulillah wa ala alihi wa sahbihi ajma'in. Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to all of you. It gives me great pleasure to be able to address all of you today in order to discuss on default and debt restructuring in Islamic finance issues and solutions. And I think looking at the topic, it is very wide, and I'm not sure whether I will be able to cover all aspects of the topic to the satisfaction of the listeners, but I hope at least I can cover the main points so that there would be a trigger for further discussion at the end of the presentation, inshallah. Okay. In his introductory speech, the chairperson has actually highlighted on default and restructuring exercises on the sukuk market. For my presentation, I purposely do not want to focus on sukuk, but of course I can entertain some questions, if any, on sukuk, because I want to make the topic more general with regards to default and restructuring in Islamic finance in general, because we have seen in Malaysia particularly quite a number of court cases involving default and also some attempt to restructure Islamic financing transaction with retail customers, which had actually attracted a lot of interest actually from people on the ground with regards to how to deal with this situation and how to do justice to the parties when they first go to Islamic bank and get financing for their home, for their business, and suddenly they have perhaps cash flow problems and they have problems in paying the bank, and suddenly the bank are after them in the court. So there are issues with regards to what the bank can do, what the bank can recover from the customer, what would be the best solution for them. Because of that, I intend to make my presentation more general to cover perhaps the issue of default and debt restructuring in both scenarios, whether it is for retail customer or whether it is also for corporate customer in the form of sukuk. Okay, so basically before we go into the details of the discussion, firstly, we will look at just the basic things about default and about what is debt restructuring. I've taken very simple layman explanation in Wikipedia. So we're talking about default. Essentially, it's about failure to pay back a loan, failure to pay back a debt obligation, and this default may occur whether because of inability of the debtor to pay their debt, or also because of unwillingness. Okay. They are able to pay, but they are unwilling to pay. Okay, that's another scenario of default. And this can occur in all debt obligations, including bonds, mortgages, loans, and promissory notes. So that is in terms of default in general. Of course, you can classify default into many categories, technical defaults and whatnot. So I'm just giving a layman definition to that, because I think you are more expert than me in terms of defining default itself. Talking about debt restructuring. Restructuring is a process that allows a private or public company or sovereign entity facing cash flow problems and financial distress to reduce and renegotiate its delinquent debts. Okay? So it's about reducing and renegotiating the delinquent debts in order to improve or restore liquidity and rehabilitate so that it can continue its operations. So it's more about rehabilitating and improving so that default will not occur. So normally restructuring would happen prior to a default, although sometimes we have seen also restructuring happening after a default event has occurred. And if you compare restructuring and refinancing, it's a bit different, because refinancing is a replacement of an old debt by a new debt when not necessarily under financial distress. So now quickly, when we look at the scenarios in the Islamic financial industry or financial industry in general, it is common for the financial institutions to experience default or potential default events involving their customers, and these customers can be both individual or private customers as well as corporations. So when this happens, normally the parties will look at a number of options. Of course, the bank may have the option of taking legal actions through the courts. They may go for bankruptcy proceedings against the defaulter. But another option that is available would be restructuring options. So I would think that the first thing that comes to mind would be restructuring options. I'm not sure whether the banks actually opt for legal action first. Because I think logically when you go for restructuring, it is better because it is less expensive than court proceedings. And it also enables the debtor to continue or to improve business. So in that sense, it is less damaging to the customer. And the third reason why restructuring is normally preferred over bankruptcy proceedings is because in a restructuring exercise, it would allow for extension of time to the debtor and possibly a reduction of the debt as well to the debtor. So when we talk about default and restructuring in Islamic finance, we are looking at actually a number of issues which may not be arising in a normal conventional financial service. Because when you look at the contracts underlying Islamic finance, they are actually involving various contracts. Talking about conventional, they only have a lender and borrower transaction. So the contract is always a loan contract. So the default is on loan given, and the restructuring is on debt arising from the loan. But when we're talking about Islamic finance, it depends on the contract used for the purpose of financing. And I believe most of you know that generally the contracts in Islamic finance can be divided into three categories. One is the debt-based or sale-based contracts in the like of Murabaha financing, Baik Bithaman Ajil or BBA financing, Istisna financing. All these contracts, what would actually result is the customer would be indebted to the bank, be indebted to the bank for the price of the asset being sold to the customer. So there's a debt created, the customer is the debtor and the bank is the creditor, and the debt actually arises from a sale contract where the price is deferred to the future. Other financing in Islamic financial services involve asset or lease-based financing, where we have ijara contract, leasing contract, ijara mutahiyah bitamlik, financial lease where you have a leasing contract ending with transfer of ownership to the customer, and we also have ijara mausufa fi zimmah lately, which is the forward lease contract, where you have the lessor leasing an asset under construction to the customer. So these types of financing would involve different type of obligation compared to the sale-based type of financing. Okay? And the third type of contract involved would be the equity or project-based, which normally use the contract of mudarabah, joint venture, partnership, or the contract of musyarakah, equity partnership, or wakala bil istismar, investment agency contract. So the nature of this contract would involve financing by way of equity participation or investment in a particular project. So obviously these different types of contracts would give rise to different nature of obligations on the parties involved. Some of the contracts would result in debt obligations being created. Some of these contracts will not involve debt obligation, it's non-debt. Okay? So because of the different nature of obligations, when we're talking about default and restructuring, there would be different Sharia and legal issues that would arise for each categories of these contracts. Okay? Now, we are now looking into the debt-based financing first, because I think this is the most common one before we go to the lease-based and the equity-based. So when we look at the default and restructuring cases in Malaysia, mostly involving debt-based financing, particularly the contract of Baik Bithaman Ajil, BBA, especially for retail customers. For sukuk also, I think most of it involving BBA Murabaha financing, although we have also some defaults involving ijara sukuk, BBA and Murabaha sukuk, some also involving ijara sukuk. In general, when we talk about debt-based financing, there can be two main situations of default. Okay, we have seen earlier, it can be the debtor actually able to pay, but unwilling to pay. Okay, they are able but unwilling. So basically, debtor is not in financial distress. They have the ability to pay, but they did not pay. and that caused the default. So the term in Arabic is musir. Okay, musir meaning that you have the ability to pay, but you choose not to pay, or you are delaying in the payment. The second situation of default is when the debtor is unable to pay. Debtor is in financial distress, and this is termed as mu'sir. Okay, mu'sir meaning that you are in hardship and you are in financial distress. Okay, so these are the two main situations of default. So in terms of the general Sharia guide for default in these two situations, then first I will look at the first scenario where the debtor is not in financial distress, actually able to pay but choose not to pay. So for this type of debtor, the Sharia position is the debtor must not delay the payment. The debtor can be forced to pay. It is actually haram or impermissible or prohibited for the debtor to continue delaying and being delinquent when the debtor has the means to pay, because this will cause injustice to the creditor. Okay, so this is clear in the hadith or the saying of the Prophet sallallahu alaihi wasallam, where there was a report that the Prophet said, "Matlul ghani zulmun," which means the delay by a wealthy person is an injustice. Okay, so if a person is wealthy, having the means to pay but choose to delay, then that person is considered as causing injustice and committing a prohibited act. And what would be the treatment for this type of debtors who have the means to pay but choose not to pay? The Prophet said in another hadith, "Layul wajidi yahillu 'irduhu wa 'uqubatuhu." Okay, basically, the delay of a person who have the means to pay would allow for his defamation and his punishment. So basically, you can defame the person basically by publishing his names, as blacklist his name, and publishing that he's a debtor who is delaying his payment, and also punishment. So in the past, this type of debtor have been punished in various ways. They may be in prison and may be punished by the court in order to get him to pay. Okay, and other recovery mechanisms can be imposed. Okay, for example, you can have order from the court to foreclose his assets for the payment, etc. Okay, so that is the scenario. Basically, if the debtor has no financial difficulty and just purpose